Good evening, friends. This is Adeel Rizvi, and I welcome you all to today's webinar on Tuesday night at 8 p.m. Sydney time. And we have a very special guest today. And before I go ahead and welcome our guest, I would like to welcome you all who are joining us live, as well as if you are joining us and watching the recording later on. So please make sure that you let your presence know if you have just joined us or if you join at any point. Please leave us a comment, say hi, say hello, like, subscribe, and share this with anyone who can benefit. And if you're joining later on, make sure you post your questions and also let us know that you are watching a recording. At any point, you can share your questions in the comments. We are live on different social media platforms. So wherever you are watching us, please feel free to share your questions for our expert today, and we would love to take your questions. So before I go into the topic, I would like to introduce our very special guest, Mr. Saqib Chaudhary, who is a taxation and business services expert from Saqch Partners with over 20 years of local experience in the Australian market. Hi, Saqib. How are you today?
Good, Adeel. Thank you very much. Thanks for having me.
Beautiful. It's a pleasure having you today. And we discuss a lot of things offline, and in the background, it will be good to have a bit of a discussion on those things today while with our audience as well. So guys, before we dive into questions with Saqib, I have a lot of questions to ask him today. I would just like to quickly jump on about today's session. So what we are talking about today is what is capital gains tax and how are these negative gearing reforms, which we are hearing in the news, how are they going to affect the future property investors, the current property investors, and even the first home buyers? Like, will they have any impact in the future if they are looking to become property investors? So we will be talking about these things. They are in the headlines these days, and we will be talking about them. If you want to get in touch with myself and book a call where you want any advice around your property strategy, feel free to book a session. The QR code is right there. I would love to have a chat with you. First and foremost, the disclaimer before we move ahead: anything we discuss today will definitely be generic in nature, and there is no financial, legal, or tax advice. Make sure you seek your own independent advice before deciding to act on any information that is being presented or discussed in today's webinar, because the information we talk about today may or may not be relevant to your personal circumstances. So we have a very clear disclaimer like every week, and this is very, very important. So now we will delve into the discussion with our guest, Mr. Saqib Chaudhary. So Saqib, please tell me about what is this buzz in the media about negative gearing reforms and it's getting scrapped and whatever. I mean, what is negative gearing, just for our audience?
Okay, look, let me give you a bit of perspective. Actually, Labor, they made a promise back in 2016 and then back in 2019 that they will, scrap the negative gearing benefit and the capital gain tax. So they want to actually give advantage to working class and bringing that all that benefit. I mean, it is just the general perception is
Yep.
the negative gearing benefit and the capital gain tax discount benefit is so for the wealthy people of
Yep.
Australian society. So
Yep.
uh, they made a promise. Labor government made a promise back then, although they did not win election on that basis, but still they made a promise. And now people are asking them, you made a promise to just reform and make it more equitable for all Australian citizens, so you need
Yep.
to do it.
Yep.
So that was the story behind this reform. Now uh, if you look at the practical side of the things, Labor is not willing to make any change because they think if they are doing any change, that will negatively impact their position and their voters. So
Peter, if you just don't mind me asking over here, why would be that? What exactly is negative gearing?
Okay, negative gearing is if you are investing in a property and the income which you are generating as a rent from that property is less than there are the operational expenses of that property, like the agent fee and the interest costs and the depreciation, all those costs. If those costs are, or the expenses are more than the income you are making out of that property, that
Yep.
means that loss can be adjusted against your any other income. And that's why you can have a bigger savings.
Or tax
Okay,
benefits.
so yeah, the tax benefits. So that is the negative gaining is all about.
Hmm.
And then it is linked with the capital gain tax discounts. When you are having a property buying, initially you are getting a negative gaining benefit, and in the longer run, when the property price will go up, and after down the line, maybe after 5 years or 10 years, when you're selling the property at a gain,
Yep.
you will be paying tax on that gain, but not on the 100% gain. Rather, 50% of that gain will be exempt for you.
That's
That
the
is
capital
actually the
gains tax you
discount.
mean. Yep, that's the capital gains discount, isn't it?
So this story is all about negative gearing benefits and the capital gain tax discounts.
Yep.
So the Green Party and the other parties, they are saying, okay, you need to bring that down, phase down the negative gearing and capital discount both. You need to phase it down
And what does that
because it
phasing down
is.
mean? What does that really mean? Are they saying that from 50% you should bring it down to 20%? Or what does that really mean?
Look, there are different, political viewpoints on this.
Okay.
Some people, they are saying you need to, scrap it at all. I mean, 100% scrap it now, because no other country is giving this type of concessions and
Hmm.
discounts. So why Australia is giving? Because if we are not giving this discount, that means we will have a more tax revenue, and ultimately that revenue will go towards maybe improving the budget deficit,
Yep.
and that money can also go to make the housing more affordable for the first home buyers.
Very
So that
important.
is
Very
okay.
important.
One argument is, okay, we need to just scrap it.
Yep.
And other people, they are saying, okay, it is impossible to do that,
Hmm.
because uh, every government want to attract the investment, especially investment in property, because
Yep.
property investment is linked with a lot of other, industries,
A lot of
construction
economy runs around it,
industry,
like what you're saying.
tradies, and
Yeah.
your infrastructure, and all council, and a lot of other stakeholders are involved.
True.
So if you are just scrapping it, that means you are hitting a lot of industries. So they
Yep.
don't want to do that. Rather, they are trying to find a balance, like a approach where they are phasing it down, like the 50% discount, bring it down to 25% capital gain tax discount over a period of 5 years.
Mm.
So
Yep.
if you are doing that, like a 5% reduction every year, that means roughly $5 billion coming into Australian economy, because you are not giving that money to the wealthy people. Rather, the money is coming back in the hands of Australian Taxation Office, and ultimately that will go into to the society again.
Okay.
So
So
five
let's.
percent, $5 billion every year, that will be the saving.
Yep.
And also, if you are limiting negative gearing, when I'm saying limiting negative gearing means, uh, okay, instead of unlimited properties loss can be adjusted against any other income, you are allowing, okay, for one property or two properties only. and also the newly built properties, not the existing homes. That
Yep.
way, you are limiting the loss adjustment against you any of your other income. So if you're doing that, that means you're saving another $2 billion every year. That is the rough estimate, which has been recently published by the Treasury Department.
So
So
how will
that is
that
the
impact the
approach.
property buyers? If I just want to go back to the property buyers, people who want to invest in property, people who want to build property portfolios, how will that really impact them as a layman, as a common man?
Look, if someone is only investing in property and with a view of adjusting those losses which a property can generate against their other income, now they will have maybe a lesser option. I mean, the property investment would be a less attractive option for them if there is no negative gearing. And
Yep.
also the capital gain tax is discount is out of window, then it will be less attractive investment. And a lot of people then have to think and diversify their portfolio, and maybe they will be either investing in shares market or maybe crypto market or some other they will try to find some other investment vehicles.
Yep. And I definitely think that it will not really help the property market much because you need investors' money, as you said in the beginning. And if you
Correct.
if you don't incentivize the investors and they're pulling out, we are already in a supply shortage. We don't have enough properties being built, but we have a lot of population increase every year because of migration and a lot of interstate migration as well. So what that essentially would do, in my view, if the negative gearing goes out of the window, then suddenly the investors will pull their money out. We are already struggling in the building industry where people cannot afford to build new homes.
Yeah.
Investors are going out. As a result, we will still have further reduced supply, which means property becomes more affordable because there will be less properties being built and more people fighting for those properties. So the prices will keep rising for the properties because the demand is not slowing down, isn't it?
Yeah, absolutely, absolutely. Look, there are a lot of other factors which we need to consider to improve the affordability of housing. Not
Yep.
only these, I mean, these are two factors, negative gearing and capital gain tax. These are the contributors, but
Yep.
that is very minimal. I mean, in terms, look, Australian housing market is at over 10 trillion dollar market,
Yep. Very true.
and we are to, and 70% of those properties are owner occupiers, and
Yep.
only 30% is the investors properties. So the overall position is it is I mean, these two negative gearing and capital gain tax, they are impacting, but their overall impact is not significant. We Australian authorities, I mean, they need to improve the supply. Like for example, they recently started a build to rent scheme. I mean,
Yep.
they are approving the bigger projects which is only built for renting purposes. So
Yep.
that will improve the supply. And also, there is they're giving equity. I mean, if someone is not having enough resources to have a mortgage, then government is giving incentive. Okay, we can have a equity in that property. We can have a 30% or 40% equity. You only need to afford and plan for a 60% of the financing. So that type of incentives can also help to help the cause and improve the supply of the housing.
Yep, definitely. And I just want to appreciate Margaret for your comment as well around self-managed super funds. Yes, that will potentially, we'll see how will that get impacted as well as we go along and if these reforms are accepted. But also I wanted to check with you, Saqib, about the ideal reform package. So what does that look like?
Look, at this stage, the ideal reform package is where they are not throwing everything out of window in one go, rather adjust a policy which is more balanced and which is just phasing down these concessions. Like,
Mm,
as I mentioned earlier, capital gain tax discount, 50% discount, bring down that to 25% over a
yep.
period of 5 years, like 5% discount every year. And similarly, negative gearing, uh, they are thinking to make it more equitable with other countries. Like, for example, Canada. Canada, they don't allow depreciation to be as to be allowed as a deduction. So
Yep.
maybe we can see that happening in Australia as well.
Yep.
And
Yep.
also other factor which is under consideration is to allow the losses to be adjusted only against investment income. Right now, the
Not against
losses from a
50%.
property can be adjusted against any other income,
Okay. Okay. That will be a
but
big change.
but they are thinking to only allow these losses to be adjusted against a similar income.
Mm,
So in future or in the same year, which is
okay.
actually which is happen which is uh, the current law in US and UK. So they are only allowing these losses, property losses, to be adjusted against the similar income. So maybe that will be the plan. So which is more balanced instead of giving 100% or outrighting just throwing it out of window. It is maybe a more balanced where you are allowing some expenses
Yeah.
to create losses and some not, and then that it will be more a balanced approach.
Yeah. I personally have a view that it will they will find it really hard to do it, and because at least 57% of Australian wealth actually sits in real estate, right? And to
Correct.
do and implement anything like that, it's a big decision. It will have really big impact. So I think we have to watch this space very closely, whether or not they can do it, and even if they do it, whether it's a phased approach, and if they are phasing it, then how many years they take to phase it out. But let's see. It's an interesting space to keep an eye on, isn't it?
Yeah, it is definitely. I mean, we need to keep eye on it. And although, I mean, in the media, generally, the Labour government, they are saying it is off the table now. They are
Mm,
not discussing any changes at the moment. But uh, in the back end, they are doing their modeling, and they are doing all the their homework and trying to find a solution which
mm.
could win them the voters' confidence. I'll give you another story. Like recently, the RPM Anthony Albanese, actually he bought a property in Central Coast of
Yep.
$4.3 million. Now people are saying RPM is buying properties to take the advantage of these measures, capital gain tax and the negative gearing. And why you are asking, and we rather why you are debating on this to change the and bring this concession down. So where you guys are affording property very easily.
Exactly, that's the thing. So it's all about words are one thing, but the actions speak louder than words. And it looks like the media and the political parties may be talking about getting uh, rid of CGTs or negative gearing reforms and CGT concessions, but it looks like on paper, in reality, that may be still a bit far fetched. One last comment I would like to take from you on what do the property investors need to think right now? How should they plan properly for this? People, especially who want to build property portfolios.
Look, at this stage, I think it's just a wait and see game.
Mm-hmm.
Uh, uh, it's my personal viewpoint is maybe if they are changing anything, they will be only changing like phasing it down. So it will not be in a state of way one with the one stroke of brush. It will not be that type of change. Rather, it will be just a phasing down the things and giving a bit of advantage to the first home buyers.
I
Although,
kind of agree with you. Yeah, I kind
although,
of agree with you on that.
although I think these changes, I mean, if they are making the change, the property price will not fall significantly. There will be a change, like maybe a couple of percent price will go down, but it will not be a significant change in the pricing. So I
Exactly.
think government need to make other measures. Either uh, we need to work out how to improve the disposable income of people.
Yep.
So and maybe because right now the disposable income and the housing price gap is too big.
Yep.
Back in the 90s, it was going as parallel. You can easily afford a property in your disposable income, but now disposable income is sitting around like $350,000 mark, and the house price is almost touching over $1 million. So
Yep.
that gap is too big. We need to, I mean, government have to take measures to bridge that gap. Only it
Exactly.
is possible to give a bit of relaxation to the first home buyers.
It is. It is not definitely. I think that's very valuable, and it's all about what steps do they take, and they can't take any rash or radical decisions, as you mentioned. And this is a space of wait and watch at this point. I personally feel there won't be much reforms at this time. It's more of uh, an election gimmick kind of a thing. That's my personal view.
Yeah.
We may not see any changes at all, but let's see, wait and watch, because I think a lot of people higher up have a lot of money and stakes in the real estate, so it's very difficult for them to let go of all those benefits as well. But again, I'm not the decision maker here, so, and I can't even influence the decision, so I will not make any more uh,
They
comments on
also
that.
have a case study of New Zealand
Yep.
where they scrapped the negative gearing, and they did not allow any type of concessions
Yep.
in terms of negative gearing.
Hmm.
That negatively impacted the real estate market.
Yep.
The and rental market crisis, grew manifold, and the rent gone up, and everything was disturbed in New Zealand. So
Exactly.
they have a case study of New Zealand in the front of them. So that's why maybe they will make a more balanced decision rather going for a one stroke and hitting everything down.
Totally understandable. Thank you very much, Sakib. I think that was very valuable. I'm just conscious of the time as well. How can people reach out to you? We will talk about deal of the week in a minute, but how can people reach out to you if they want to get tax advisory or any of your business advisory services?
You guys can reach me on our mobile number, which is our office number 04050111920. So, and also just to jump to our website, which is sachpartner.com.au. And we are on all social media platforms. You can reach out from those platforms to us.
Beautiful. That's great. And we have been working with mutual clients as well. So that's great. And I know the level of service and the due diligence you guys provide from taxation point of view. That's really commendable. So it was awesome having you today. But before we wrap up, just a deal of the week very quickly. I want to share with our audience. So this is, and for your interest as well, Saqib. So this is the property that we bought for our investor client. Actually, second property in 2 years that they've bought, and this property was bought for like 5 months ago in a very high growth suburb of Townsville. And I think what would really potentially interest you is the build date. It's not very old, so it comes with good tax depreciation on it right now, which we are talking about being scrapped potentially. So for now, we have good depreciation benefits on this, and it's a really nice house bought for 536 grand 5 months ago, and it has been performing really, really well because of the highly diverse economic area that we have purchased this in. So the client is, yes, they are paying something out of their pocket. They're probably paying around 1 grand every month, because the mortgage uh, and other council-led expenses are not enough to be paid completely through rental income. So rental income is around 3 grand, 2.5 grand roughly for the month, and their expenses for the month is around 3.5 grand. So yes, they are at a loss that we discussed about today. That is around 1 grand loss from cash flow perspective, but against that loss, they are making around 7 to 10 grand every single month as well. So it's like a no-brainer for them, because they know what they can afford, and they will ultimately get some depreciation benefits out of it as well once they do their tax returns. So yeah, this is just a quick deal I wanted to share with you guys. There is a valuation from CoreLogic as well, which shows the property has pretty much made 40 to 45 grand in the last 5 months since it was purchased. So yeah, that's the deal of the week for you guys. And if at any point you would like to reach to myself, want to have a chat about your property strategy, want to grow wealth using property, more than happy for you to have a chat with me. This is the link. You can book a call. We can have a completely complimentary chat and see how we can help you out. But thank you for tuning in, guys. If you're watching the recording, please leave us your comments as well. And thank you
Adeel,
very
I
much.
also want to
Yeah, please.
offer a free consultation to all
Yep.
our participants today. So,
Beautiful.
because we are providing a free consultation which is related to your business, we can
Yep.
do a free diagnostic test for your business, and we can identify the areas where you can improve, and that can help you to improve the bottom line of your business. So
That's beautiful.
this is the
Really
offer from my side as well.
amazing. Love it. Thank you so very much. And we will post Saqib's contact details in the comments as well, guys. So make sure you get in touch with Saqib and his team for any taxation or business advisory services. Thank you very much, Saqib, for joining in. Thank you, everyone who joined in as well.
Thank you very much. Thanks for having me.
It was a pleasure having you today, Saqib, and I'll see you around. Take care.
Thank you. Take care.